Greetings, members, one and all of the Salivation Nation. We are here again with Lior Gans from Wealth Research Group. Lior, welcome. A lot has happened since our last discussion, and we want to keep up to date with the markets and what's going on in the world and how that can affect precious metals. So welcome, sir. Good to see you.
Good to see you too, and thanks for having me back.
Sure thing. There's a lot that's been happening in the world. We just found out a few days ago that Her Majesty Queen Elizabeth II has passed away. There's tensions in Taiwan. The war in Ukraine is still raging on, and the World Economic Forum is still being buzzed and talked about. And so with all of that happening, what are your thoughts on some of those events and how they may interplay with the markets, with precious metals?
In general, I think that we're going through a major generational reset of interest rates and of demographics. So from the interest rates side, I think that for the past 14 years, everybody understands the central banks have been very accommodative, keeping interest rates at zero. And even though interest rates were at zero and QE programs were running the whole time, they were buying and monetizing the debt, they couldn't reach that 2% target inflation that they wanted on the CPI. It always came up short at 1.2, 1.4, 1.5, 1.6, 1.8. That era of very muted inflation and zero interest rates, that era is over. It created a lot of inflation potential, and because of the unprecedented events of 2020, plus what happened in the response, in the stimulus response in 2021, and because of all of the behavioral shifts and the deglobalization of supply chains, all that inflation potential erupted at once, and it caught them by surprise, so that at first they didn't even acknowledge that it's a real trend. Throughout 2022, they've been chasing it to make sure it calms down. So my opinion, my analysis, my research is pointing towards the thesis that interest rates are going to go up and up to about 4% on the Fed funds rate, and then they'll start to talk about accommodative or dovishness, but they won't do it for the remainder of this foreseeable future, 3, 4, 5, 6 years. Interest rates are probably going to stay very normalized and definitely not going back to zero. But if you want like the full analysis on this, just hit our website at wealthresearchgroup.com/ZIRP. That's ZIRP. It's acronym for Zero Interest Rate Policies, and you'll see why I'm talking about this. This consensus or this change in mentality for the markets is very hard to digest after 14 years of zero interest rates. To see that now there are real interest rates in the economy, it obviously creates repricing for stocks, for bonds, for real estate, for precious metals, for everything. In the meantime, right now, because there's an uncertainty as to how long they'll keep raising interest rates, you're also seeing a liquidity crunch because buyers of all assets are asking themselves, am I too early? Is this going to go on for much longer? Therefore, I'm asking for a discount on everything because I don't know when interest rates are going to peak and when inflation is really going to slow down. So that's what you're seeing. You're seeing a lot of buyers asking for discounts and a lot of sellers not looking to sell, and that creates that freezing mentality in the economy. So that's one thing. Secondly, like you said, there's geopolitical events. Russia and Ukraine, I think that's a 10 to 15 year nightmare that just started. So you need to completely change the way that Europe gets their natural gas, oil, and coal. And I think that with regards to relations between the Ukraine and Russia, it would take a decade or more to kind of heal and broker, if not more. So that's a real big problem. With Taiwan, for me, that's also a huge issue that's going to stay with us. But I also want to point out that everyone's looking at Taiwan. I'm looking at this little tiny region called Malacca. If that name doesn't mean anything to you, go to wealthresearchgroup.com/Taiwan, and it's actually a report about Taiwan and Malacca. It's really important that everyone that cares about America, China, and this geopolitical tension knows exactly that region. When news come out about it, that they are aware of what's going on. Big picture, we are now in a reset in the uncertain part of the reset. Once we get over the hump, I think that asset classes will start to normalize in their new prices. less distress will be exhibited, and you'll start seeing growth again. But we are entering into an inflationary environment, even when the Fed says, hey, I think we've got a handle on this. Even when they say that, believe me, throughout this decade, you will not see 2% on the CPI. It will be higher for the remainder of this decade.
That is something else. And this reset you're talking about is with regards to interest rates. And we know that there's a talk about a great reset in terms of the central bank digital currencies out there as well, too. That's not what you're talking about, but likely that's coming as well, too, correct?
I think that with regards to central bank digital currencies, it will take two things to kind of bring it out in a massive scale. It's either going to be a currency crisis, and they'll use the crisis to introduce something else, because hey, if there's a crisis, then there's room for people to accept something new. A crisis for the dollar, in my opinion, could be a major country or major countries forming some sort of an official alliance with China, creating a second reserve currency. So where the dollar is no longer the only reserve currency, there's another one, and then there's some sort of an intermediary conversion rate among the two, and then you'll have like two blocks. So China and the countries that want to trade more with China and their own currency, and the West. Okay, if that happens, then yeah, maybe there's an event, maybe there's even like a G7 meeting, like a Bretton Woods style meeting, and you introduce central bank digital currencies in a massive scale. Like you roll them out with a big plan. I personally do not think that's what's going to happen this decade. It might happen in the 2030s. What I think is more likely is that they'll roll out a pilot program. They'll issue it slowly in certain areas of the population and certain regions, or something where there's a real small pilot program that they can gather data on and see the public acceptance of it, the corporate acceptance of it, etc., and then start to talk about it more in their FOMC meetings. The Fed is not in the habit of introducing, life-changing things overnight. They want to broadcast to the market and signal to the market as much as possible in advance. So the fact that they're not talking about it that much to me, is proof that it's not something that they really are putting a lot of effort into.
Yeah, some of the best estimates say it's about 5 years out. I mean, Biden did have an executive order about it. And what you're talking about, the BRICS nations, there's been talk of a Russian gold standard, a Moscow standard that would compete with the LBMA. And there's been a lot of buzz about that as well, too. So that's great analysis there. So with all of these things that we've talked about, where do you see the gold and silver going in the next, well, let's just say 5 years?
I think right now, silver especially is under a lot of pressure for three main reasons. One, the dollar, if you look at the DXY index, it's right around a 22-year high. It's at par with the euro. If you track the euro and silver, you'll see that they are very much correlated. So a strong Europe means strong silver over the last 25 years. I think that once the crisis in Europe starts to unwind, then you'll have a better chance for a weaker dollar, stronger euro, and stronger silver. For now, you're in one of two camps. Either you already have enough silver, and I think you should just do nothing if you can, or if you don't have enough silver or don't have none, then it's a good time to accumulate some physical. If you're a trader, in other words, if you're looking for an exit strategy, you're looking to buy silver in order to sell it later, or buy mining stocks in order to sell them later, etc., I think that this is a time to be patient. In other words, you don't have to rush into anything. You can start building strategic positions in whatever you think is discounted enough. But certainly you need to have a 1 to 3 year horizon on your exit strategy. So you can dollar cost average in those kinds of positions, either mining stocks or ETFs, options, etc. For the physical side, though, obviously below 20 an ounce, you're in a very good neighborhood to accumulate. For gold actually doesn't have to do bad when the dollar is strong. We've seen it in many years throughout the past decade. The dollar and gold can rally together, especially in times of liquidity crisis or liquidity issues like right now. But certainly the reset is creating pressure on gold as well, because right now the problem for many retirees and businesses and hedge funds is income. So especially for retirees, they are now seeing their income dwindling and they need to fund their lifestyle. So if you're in a situation where you need to replace some income, you need to sell something that doesn't produce any income, you sell gold. That's on a global scale. Secondly, with regards to the alternatives that gold provides an alternative to cash. And if the CPI has peaked, and the market does believe it has peaked, and interest rates are still going higher, and the markets do believe that interest rates are going higher, it means that the gap between inflation and interest rates is shrinking, and therefore you can make a real return on bonds. And if you, in a world of real return on bonds, gold doesn't do very well. I'll give you an example. My hedge fund manager called me a few days ago and said, for the first time in years, I can either buy stock in American Airlines or I can lend them money at 12%. What do you think? And I said, I think it's the end of TINA, which is acronym for there is no alternative. Because if you can lend money to a company like American Airlines for 12%, even if inflation is 8%, you're making real returns. So I think this kind of a distressed environment won't last long. I think American Airlines won't offer bonds at 12% for a very long time. Once interest rates do create some sort of a top, I think those are coming down a lot. And when those come down, then I think we will return to a situation where CPI is higher than the Fed funds rate and higher than the 10-year bond. And in that sort of negative interest rate world, gold can resume its uptrend. I haven't changed my outlook for it, on a longer term basis. I do still believe, as I said 2 years ago, that it's going to 25.82 by the year 2024. So I haven't changed my outlook on that. I still believe that there's a huge rally that's happening on the other side of this.
$25.82, $2,582 by 2024. Amazing.
I can explain in 1 minute how I got to that, and it's also detailed in a report which is wealthresearchgroup.com/11, like the number 11 or just spell 11. It's the 11 reasons how we got to that. But basically on April 1st, 2019, the Central Bank of Central Banks, which is the Bank of International Settlements in Geneva, it re-rated gold from a tier 3 to a tier 1 asset. So basically the collateral on gold became 100% instead of 50%. In other words, on that very day, whatever the price of gold was, the central banks assumed that it's worth double that. And on that day, it was worth $12.91. If you double $12.91, that's $2,582. So that's in the eyes of central banks, that's probably where gold is fair value. And that's even before all the money that was printed during the 2020 and 2021 fiscal and monetary stimulus.
With that being said, it may be a little bit more difficult to forecast silver's price by 2024.
For me, the best way to do it is just as a derivative of the gold-silver ratio. So if I think that it's going to 2,582 by 2024, and I believe that we will see about a 65 or 70 to 1 on the ratio, then for me, silver is going to between 35 and 45 an ounce by 2024.
Finishing up here, let's talk about the mining sector. And overall, for gold and silver mining, what are you seeing out there?
We're seeing that in terms of the managements were really ready for bad times. So unlike previous times when there was a lot of distress, there's less distress right now, less cash flow problems. And also, we're in a different environment. The other times that we've seen gold and silver tank throughout the past decade, the tech sector was hot. Venture money flocked into cybersecurity, biotech, crypto, whatever else. Now there's a clear path for commodities, natural resources, infrastructure, real assets and not paper assets. In other words, the real economy, infrastructure, energy, how, to make sure we have enough commodities. It's back in a cycle, in a bull cycle, and it's been an 11-year bear market in general for infrastructure and real assets because tech was doing so well. I think we have entered into a cycle where the real economy will be more important. Three main reasons for it are: one, deglobalization. So every country is not trusting other countries to source their energy and commodities. If you were America, would you be willing to rely upon African countries or Latin American countries to sell to you before they sell to China? How can you know? How can you be sure? All these countries are looking to create their own independent sources, and that is very capital intensive and creates a lot of profits for the mining sector. Secondly, you have ESG and compliance, and all that is adding a lot of cost to mining projects and delaying them. So it prolongs them. So if you're an investor, you're saying, I want more money because it's going to take 10 years. I'm risking a lot here. So that drives prices up. And I can go on for a very long time on why it's happening, but we are in an era in a cycle here of about 7 years where the millennials are going to buy a lot of homes and they're going to form families. This entire decade, or whatever is left of it, the next 7 years are going to be very inflationary.
And that inflation is going to put pressure on gold and silver, and of course the fuel costs and the like. So we're going to see probably more. And that's encouraging to see that the mining sector is doing well. And
it's doing well, and there's demand for it. Investors want to invest in it.
Right, yeah, because one of the things, especially with silver, is that because of supply chain issues, there's not as much demand getting the silver into the microchips and getting them distributed because of supply chain issues. And hopefully that will solve itself, work itself out, and that will increase demand for silver, which means it'll increase demand for mining silver as well. Most silver is mined as a byproduct of other metals like copper, lead, and zinc. And so that's why we have to pay attention to the copper, lead, and zinc mines as well, because that's where most of the silver is coming from.
Yes, and gold.
And gold, yes.
Yes, it's a byproduct. To find a silver miner or a company that's advancing a silver project where most of the revenue comes from silver is very rare. So you're right. But I think what's really important is if we keep having between a 3 and a 5% CPI for the next 5, 6, 7 years, you're talking about a devaluation of the dollar by about 30% in real terms in purchasing power. And that's why I think that silver can hit all-time highs in this decade nominally. So above 50 an ounce is not something that I think is problematic to analyze and assess between now and 2029. I do think that that's going to happen. When you think about how the next few years play out and whatnot, there are problems that are not easily solved. We are in really a reset for workplace, with hybrid workplace, with demographics, with deglobalization. I think that people underestimate how long it would take to solve all of these things. And when you are not living in an efficient economy, in an efficient globalized economy, then things cost more. There are shortages. Americans are not like, what? The shelves are empty? How's that possible? But you will see occasionally empty shelves in certain products. It will become more of a normal thing.
Wow. Interesting. That's what we have to look forward to. Well, Lior, as always, I very much appreciate your insights. And I want to extend a multitude of gratitude to you for taking the time for this interview, and also extend a multitude of gratitude to all of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe. In the words of Goldmember, I love gold.